certainly the lesson that we've learned is that, higher quality real estate tends to outperform. Where we have stuck to conviction sectors and high quality assets, despite challenging periods of time, we've tended to come out of those well. Despite the macroeconomic environment, which obviously is challenging, around the world today, what we are focused on as we're putting capital to work in Europe is two things. Number one, conviction around, medium to long-term occupier trends. So those sectors that will benefit from, robust occupier demand over the medium long term, notwithstanding short-term volatility and challenges. And then sectors that we believe will attract increasing proportions of the kind of institutional investor capital around the world over time. So those sectors which we feel investors will gravitate towards, relative to perhaps those sectors that they have focused on historically. And then in terms of France, obviously relative to Europe, and this will be well known to you, I think, France is outperformer at the moment, with lower inflation than other countries in Europe. I think the highest recipient of FDI across all of Europe. So France, of course, is doing relatively well, and on an absolute basis, pretty well at the moment. So I think in terms of the opportunities over the next year, but also over the next 3 to 5 years, I think those will really derive from what we see as a significant drive towards re-equitizing capital structures across real estate investors, or said another way, deleveraging, right? Given the rate environment we're in and the paradigm shift in rates relative to perhaps what we've all enjoyed in the last 20 years, or maybe 30 years, we're in a very different world, and everybody's going to have to rebalance, including ourselves, their portfolios in that context, and that is going to lead to transaction activity, pretty meaningful transaction activity we expect over the next 3 to 5 years. In terms of threats and things that concern us, of course, the geopolitical backdrop is severely challenged, obviously, particularly at the moment with two major conflicts, in our broader region, and so that's something that weighs on us as investors. And then to some degree, making sure that we are set up for the unknown unknowns. COVID obviously was one example of that. Conflict can be another, elsewhere, for example, and just ensuring that our business and our capital structures and our investments are in the best possible position to withstand what may come our way, which we couldn't necessarily foresee.